Alright, what's good? This is going to be video 1 of Finviz tutorial guides. I realize that I'm going to do videos on this because there's a lot to go over. And if I'm typing in chat, it's going to be kind of hard to follow. Okay, so first strategy that we're going to end up doing is reverse ETF searching. And I just discovered this strategy today, and it pays. Okay, so the first resource that you're going to want to do is under other resources. You're going to want to find this web's best ETF screener. So this is the ETF database. So this database filters all the ETFs. Okay, so when you first go on this website, you're going to want to click artificial intelligence because this is the trending sector. Next, you're going to want to click year-to-date price change. So this filters out all the ETFs by year-to-date percentage gain. Okay, so next resource you're going to want to go to is Finviz, elitefinviz.com. elite.finviz.com is the actual link if you want to know the URL. Okay, so once you go on this website, you're going to want to see the ETFs, and you're going to want to do a reverse database search. So I will say some of these ETFs don't have a collection of companies that are causing it to rise, but rather I guess like a 2x ETF of just the individual companies. So you're going to have to research them, but I'm going to save you some time and just give you what I am looking at right now. So second one, AIS. It's an artificial intelligence super cycle ETF. Okay, so if you go on Finviz and you search this, also if I'm paying for the Finviz subscription, it's like I think $20 or $30 a month. That's not bad at all because this website has so much data. If you know where to look for stocks and stuff, this is going to pay for itself in a few weeks. Like even if you have $1,000 and you're using this subscription, you're going to make money on using Finviz under like 3 weeks time just by using this data. Okay, so we're going to search AIS from this website on Finviz. Okay, this appears, the Artificial Intelligence Supercycle ETF. Now, the reason why this ETF is so powerful is because it is outperforming QQQ right now. If you're a new investor, you probably only know about SPY and QQQ, but you don't know about any of these other hidden gems. This is like a fucking honeypot ETF. This is like hidden that not many people know about unless you know where to look. Okay, so QQQ, let me just show you the stats. QQQ has a year performance of 25.77% for the year. AIS has the year to date 68% gain just on the year to date. So okay, so what we're doing is we're reverse company searching on ETFs to find individual companies that are doing better and outperforming the ETF. Okay, now the reason why that is such a good strategy is I'm going to give you an example for QQQ. So if we click open screener right here under top holdings and we go to performance and we do performance year, so this is performing, these are the top performers. Okay, these are good, right? But if you go to page 4, 5, and 6, you see that there's just companies in this ETF that are getting weighted down and holding down the performance of QQQ. So that's just QQQ as an example. If we go to AIS, okay, and we go to open screener, you see, and we go to performance filtered out by year, you see all of these companies that are doing really, really well, that are doing better than QQQ, okay? Now, you may ask yourself, which ones do I invest in, okay? Now, you can do this two ways. You could search up the individual company tickers and look at the numbers and stats, right? But you may ask yourself, what do these numbers mean if you're a new investor? Well, I'm going to save you a little bit of time. Turn down this music a little. Okay, you're going to ask yourself, what filters can I add to filter out the list? Let me just pause the music. To filter out the list. Okay, well, I would recommend these filters. 200-day simple moving average, price above 200 SMA, 200. Price above 50. Wait, sorry, wrong one. Price above 50 SMA. PEG under 2. So we went from that big list to this. These are solid growth tickers. So top one, WDC, STX, MU, so on and so forth. Now, if you want to refine the list even more, you could go under 1 and then get these 2, right? But that might be a little too fine, so I would do maybe under 2. Okay, now, if you have like $1,000 allocation and you want to put like your $1,000 into something, or like 2,000 or more or stuff like that, I would check the individual companies to see what is performing the best. So if we go to WDC, you see all these numbers. No company is perfect, by the way. If you see red, no company is perfect. Nvidia has like straight red on this whole row here, but they're the most like performing company of like the year. So we see STX, MU. So one thing I like looking at first is the recommendation. So this is 1.73 recommendation, which is really good. The lowest you could go is 1. This is STX is 1.85, MU is 1.41. So these are the recommendations. And then you see the numbers here, the performance, stuff like that. So this is the all-time chart. They look kind of similar in their small little ways, but these are really, really good companies to filter out, to kind of get a grasp of what you should be looking at. So this is reverse ETF searching. Let's do one more ETF just to kind of show you what to do. So this is AIS ETF. We're going to do QTUM now. So if we go to QTUM, okay, we see that this is up 77% on the year compared to SPY and QQQ, which only give like 20% yearly. Now what we're going to end up doing is going to open Screener to see the individual tickers in the list. Okay. Now we're going to go to performance year, filter this out by top. Okay. Now, I was looking at this earlier. This is a good example of why you should do back-end searches on the tickers. So QBTS. This company is bleeding income. It is not profitable at all, but yet it's going up in price. Why? Well, it could be speculation, right? People think that this company is going to perform good because it's a quantum computer hardware company, right? So they think like, oh, you know, quantum computing is the new thing, even though this company is kind of red. But I will say this, that this company does have some sort of good stats. I mean, it's a one rating on recommended buy, but we don't know the PEG, so this could be kind of bad in the long term. This could just be speculation, and it could drop later on. It could be a bubble. So let's do those filters that I said in the last ETF. So we'll do PEG under 2, which is very conservative. We'll do price above 50 SMA. And if you don't know what SMA means, I would do a little bit of research in that. I'm not really going to explain it in this video, but it's basically just like price being above like a certain key level. Okay, so we'll do that, and then we'll do buy or better. So we got these 5: MU, Google, TSM, ASML, NVIDIA, which are the top companies trending right now. These are the hottest companies trending right now. Let's ease the filters a little bit to get a little bit more. Okay, so if we do PG under 3, analyst recommendation, holder better, we got these companies. So if we do performance year, this is what we got. So that is reverse ETF searching. There's this huge list of ETFs, but everybody wants fast money. Everybody wants, to make money fast. So in my opinion, I would do the highest year-to-date ETFs and then do individual companies searching. If you want to play it safe, you could invest in the individual ETFs and get that average return of like 68% or like whatever the average yearly return is. But if you want to outperform the ETF, I would look into these individual companies under the ETF. But you need these resources, this website and the Finviz. But yeah, like I said, there there are companies that hold down the ETF in terms of performance, and if you could read those numbers, then you could outperform the ETF. So yeah, video 1, it's gonna be in the Discord channel. Hope you got some knowledge from this.